I still think Bitcoin's going to be materially higher in 1 year. Uh, and if that's the case, we may lag some of our leveraged peers on the way up, but we'll do just fine. But I think a lot of the market is going to wait for some fundamental catalyst to get more excited, and people are okay missing the first 10 or 20% if there's a piece of news that's really fundamentally positive, whether that's clarity. The White House has been teasing some progress on Bitcoin strategic reserve now since Vegas, and that hasn't occurred. That could be something.
Bitcoin just got a price target that sounds impossible. $1 million, $1.5 million. And it's not coming from random traders. It's coming from the biggest names in finance. Matthew Sigel, head of digital assets research at VanEck, remains confident. He says Bitcoin will be materially higher over the next year, even if VanEck's disciplined strategy underperforms more leveraged investors during the early stages of a rally. Many investors are waiting for a major, fundamental catalyst before turning decisively bullish. They're comfortable missing the first 10 to 20% of the move, as long as it's backed by strong fundamentals. Block CEO Jack Dorsey has said Bitcoin could reach at least $1 million by 2030. He argues growing global adoption could eventually push its market capitalization above $20 trillion. ARK Invest CEO Cathie Wood has projected Bitcoin's price could trade between roughly $710,000 and $1.5 million by 2030 under her firm's base and bull case scenarios. Sigel remains constructive, but he's also clear about what could challenge his thesis. He would reconsider his outlook if sovereign adoption were to stall or reverse, or if Bitcoin fails to break above its previous all-time high by around Q1 2028. VanEck continues to respect Bitcoin's 4-year market cycle. That cycle has guided its investment approach this year. Instead of buying every dip, the firm has stayed selective, allowing its strategy to outperform Bitcoin while still adding to positions during certain pullbacks. Before we dive in, don't forget to like this video, subscribe to the channel, and turn on notifications for more Bitcoin and AI insights. We're getting closer to 1,000 subscribers, and every subscription helps the channel grow.
We respect the 4-year cycle, and it's been one element in kind of not buying every dip in Bitcoin this year. And, that's one of the reasons why Node at least is up, 20%, Bitcoin's down 20 or 30%. Not to say we didn't buy some of these dips. The first time that Bitcoin hit 60K, we noticed some really one-sided positioning in the derivatives market. And then we got the bounce into the low 80s, ran right into the moving averages. And on this retest, there hasn't quite been the same type of capitulation signals in terms of liquidations or the premiums that people are paying for puts versus calls, and I think that the market noticed that, and while there was definitely a lot of bearishness, we didn't see that same type of capitulation. That said, puts are still really expensive versus calls by historical standards. We're seeing that like in the 80th percentile. So it not quite the 99th like we saw, the first time BTC hit 60K, but puts are expensive. Realized losses are in the 90th percentile historically. So people are dumping losses. So, there is maybe some hint of sellers exhaustion that may emerge here. And then we've also seen the older cohorts, kind of 2-year plus holders, have slowed down their selling. So that's another maybe hint of sellers exhaustion, and I think that's what's kind of leading to this Bitcoin bounce here in the latter half of the week. But I'm still kind of waiting and watching to get more aggressive. I still think Bitcoin's going to be materially higher in 1 year, and if that's the case, we may lag some of our leveraged peers on the way up, but we'll do just fine. But I think a lot of the market is going to wait for some fundamental catalyst uh, to get more excited, and people are okay missing the first 10 or 20% if there's a piece of news that's really fundamentally positive, whether that's clarity. The White House has been teasing some progress on Bitcoin strategic reserve now since Vegas, and that hasn't occurred. That could be something, and then the sovereign adoption, I think, is a continual story. We're now up to 22 countries that are either mining Bitcoin or holding it at the sovereign level. It basically goes up by like one or two countries a year. If that trend were stop or reverse, that would force a reevaluation. If Bitcoin's not above its all-time high by like probably Q1 2028, that forces maybe a thesis rethink. But otherwise, just stay the course. Don't get too excited either which way.
Bitcoin's price is climbing, but under the surface, something unusual is happening to the network itself. Matthew Sigel also highlights a broader concern. Bitcoin's hash rate has been declining, marking its longest stretch without reaching a new high. He says part of this weakness reflects listed mining companies reducing their mining activity as they shift resources toward AI infrastructure. For the first time in 6 years, Bitcoin's hash rate, the total computational power securing the network, fell during the first quarter. It is currently down by around 4% year-to-date, hovering around 1 zettahash per second. Over the past 5 years, the rate has surged from roughly 100 exahashes per second, a tenfold increase, according to Glassnode data. Each year, the metric rose during the first quarter and ended with strong full-year growth, more than 10%. According to Sigel, a sustained recovery in the hash rate would strengthen confidence in Bitcoin's network and likely encourage more investors to buy, even if Bitcoin has already rebounded from its lows. Here's why these matters. Hash rate is the heartbeat of Bitcoin security. When it slows down while price rises, smart investors take notice. It's a signal worth watching closely in the months ahead. Let's get back to the interview.
Yeah, I mean, it really depends on your kind of individual positioning and risk reward. What I've been telling clients is that you want to have your full position by October. So, putting in some type of like time-based buying where you add a few basis points every month or so until we get into Q4. That seems like a reasonable strategy. I can't say I know exactly what's going to happen. But the fact that the 4-year pattern matched up so well, like you got to respect it a little bit. So like in the last downdraft, when BTC hit 58, we didn't add to spot Bitcoin, but we did add to like BitDeer and Mara, and those are two names that are relatively pure play on the bit mining side. They're trying to pivot to AI, but BitDeer is completely vertically integrated now, from the chips to the mining machines to the data centers, and so their margins could see enormous tailwinds if Bitcoin recovers. So I feel like there's enough exposure to the coin via the pure play miners, but you raise the kind of the existential question: if everyone leaves, then what's left? And one thing we noticed is that this decline in the hash rate, the Bitcoin hash rate's down year to date. It's actually the longest time that it's fallen without making a new high, and some of that is definitely reflecting the listed miners leaving. And our thesis, or my thesis, has been that sovereigns would pick up the slack, and some of that's happening: Ethiopia, Kenya, Kazakhstan, but not big enough to make up for the overall hash rate decline, and that's a major question mark, I think, for Bitcoin. And people, once that is rising again, I think people will be happier to buy, even if we're up off the bottom when it occurs. Last week, internally, we were like, okay, well, now the ball is in Saylor's court. He's going to have to make some decisions, and they did that over the weekend. I think those decisions were sound to sell some Bitcoin, basically. But does that mean the stock should trade at a premium to NAV? I mean, you're buying a hedge fund that can trade 5 things: its own capital stack and Bitcoin. What PE do you pay for such a hedge fund? I pay very low. Agree. I think I said it up to you a year ago. Was one idea that I had for these DATs when all these DATs were IPOing and merging is like they should have a living will in their prospectus that if the stock trades below a certain MNAV for a certain amount of time, that they will just unwind the company, sell the coins, management loses their job, and you just return the cash to shareholders. And if that existed, you might see these stocks trade a lot closer to the MNAV because the minorities would feel that they have a path to realize the value.
Yeah.
And as someone who covered emerging markets for a long time, conglomerates in Asia, like they can trade at 0.3, 0.4 times NAV for a long time if minorities are observing entrenched management control, related party transactions, tax considerations to unwinding. So that it's through that lens that we've been underweight those types of names.
Bitcoin is entering a phase where long-term trends matter more than daily price swings, while AI is creating new opportunities and challenges across the digital asset space. For investors, the biggest advantage may come from staying patient, following strong fundamentals, and avoiding emotional decisions. As Bitcoin adoption grows and the market continues to evolve, those who focus on the bigger picture instead of short-term noise could be better positioned for the opportunities ahead. Do you think Bitcoin will reach a new all-time high before 2028? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, subscribe, and help us reach 1,000 subscribers. Turn on notifications so you never miss our latest Bitcoin and AI insights. Thanks for watching, and we'll see you in the next video.